All right, so we are live. My name is Ryan. This is the Independent Investor Channel. Sorry, I'm just chomping at the bit here anyway to get started. If you do have it, drink it. If you have it, smoke it. That's fine. I'm all good with that. Still smiling, honestly, after a couple weeks. We can chalk the entire month up of October and completely throw it into the trash can, honestly. But it's been interesting to have this realistic wake-up call for a lot of folks. And I certainly don't wish this lesson on new investors. It's really taken everybody by storm. It's one of those things that we've actually got back to some normalcy. We really have in the stock market. Got a killer group in here tonight, no doubt about it. I just want to address, I read through the live stream last time. I missed a ton of questions, and for that, I apologize. We're going to be focusing in more on the group tonight. Is this the reason why I do this? All right. I do this for you guys to provide some transparency. I've got some folks in the group here. John, I can't appreciate you enough, man. No doubt about it. You guys have to really understand, you guys are really part of something special here. You really are. All right. And if I'm not being transparent enough with that very message, being an independent investor, man, is something that is just legit. It's straight legit. And for a lot of people out there who, look at the world of finances, man, and they think it's somewhat BS, your inkling is right. All right. So being an independent investor, man, is one of those ways that you can fight the system. It's as if you're going around all the BS in the back door and gaining all the benefits of being an independent investor, man. It's something that you should be proud of. It's something that hopefully I'm doing my very best. A lot of, I guess I need more charisma on YouTube, I'm super happy with the growth on the channel. I really am. I just don't want to leave anybody behind, man. I don't care if I've got 10,000 subscribers or 100,000 subscribers. I really want to make sure the folks are not confused by how big this opportunity is, man. It's huge. And I think for you guys that come into the live stream every single week, man, hopefully for whatever reason, hopefully, because I'm not really that entertaining of a guy, you know what I'm saying? I didn't know where this thing was going to go 2 years ago when I started YouTube. And a lot of people say, well, this is what you need to do on YouTube to succeed. And I just am trying to do this my way. The only real example I've got on YouTube of somebody who has built a very credible YouTube channel is Ryan Scribner. There's no doubt about it, man. I've met the guy in person. I know what he brings to the table. He's just a really smart guy and is very sincere about the approach. And I think people at the end of the day will actually see that. I've got a rockin' agenda tonight. I really do. Again, I want to apologize if you were in the group last week and didn't have your question answered. I do apologize. I'm going to really try to focus on getting to this, and we're going to have an open discussion. And like I said, man, if you got it, crack it open, sit back, enjoy a little bit. Because here's the thing, man, if you've been invested in the stock market, and I know John, I'm going to get to his comments here because he's touching on something that you can really pay attention to, that kind of lack of acknowledgement to this crap that's going on. We're enjoying the exact freaking same stock market here that we did back in September. And now all of a sudden we've just flipped a switch, and all of a sudden, oh my God, we've woke up to the fact that interest rates are rising. And oh my God, we've woken up to the fact that China exists on the planet. You know what I'm saying? And they've been taking advantage of us for, some many years, and nobody ever had a problem. And now we try to call a bluff a little bit, and it's throwing a monkey wrench into the stock market. And it seems like in the entire month of October, we've seemingly woke up to all these things that have been going on for years, in my opinion. You guys realize that we reported GDP growth of 3.5% and the stock market did not even acknowledge it today? Did you guys realize that? Some real headwinds in the stock market, certainly to acknowledge, especially on the housing side of the house. There's some real interest that I have right now in how this raise in interest rates are affecting folks who are trying to write a contract and buying a house right now. And it's I wish everybody well. That's one of the best sources of creating wealth in this country, because there's not a lot of ways to do that, because you've always got everybody under the sun trying to take advantage of you, right? And that's another one of those things about being a self-directed investor, man. Like John, he's talking about him and his wife just sitting back and chilling for a bit, watching all the chaos go on. You know what I'm saying? Because it is panic selling that's going on right now, but it's also algorithmic selling that's going on by a lot of the companies that offer, machine learn investing, right? The machine invest, and they hit those technical levels in the stock market. And you can see once those technical levels are hit and broken, that's when the algorithmic selling picks up. And that's when the selling pressure just compounds on each other. It really does. But man, if you're an individual independent investor, man, you can really sit back and say, wow, you know what I'm saying? I'm losing money just like everybody else in the stock market. All right. There's nowhere you can hide when this stuff is going on. All right. The difference between an independent investor and everybody else under the sun is that they have a middleman. They have a middleman who are making money off of those folks, making money off of their clients no matter what. They're making money off of their clients no matter what. There was a killer show today on hedge fund managers. And I tell you what, man, another thing about just being a normal fella, hard-working fella. I know I talk to a lot of hard-working guys and gals out there who tune into the Independent Investor channel for a little bit of foresight from another regular freaking person. It seems like when you watch the television all the time, you get this impression that they're part of some different world. It's crazy, man. It's crazy. And so to hear it from somebody like myself, who basically tells you, you know what, you can accelerate your wealth as just a regular person, right? And that's why I talk about the importance of scale. But man, those hedge fund managers, those rich people out there in this country and abroad who are paying these idiots to manage their money, they're paying them 20% up front, thinking that they're trying to provide you some sort of alpha in the stock market. They are getting crushed. They're getting absolutely annihilated. And honestly, if I've got some of my techies in the group tonight, man, I wish you could find that article that they came out with talking about how bad the hedge funds are getting crushed right now. The rich people, man, they don't even care. They just put their head in the sand, they pay their 20%, and they're losing money hand over fist. So for all of us salt of the earth people out there, right, we can be rest assured that yes, our money is adjusting back. But when it turns a corner and starts going up again, you want to know who we share the profit with? Nobody. And that's the empowerment piece, man, that I want you to guys feel proud of. You're part of a movement here, man. I'm not trying to just boost up my channel, okay? I'm not trying to just boost my ego. I already know this stuff, all right? I already know it. And the least I can do is try to empower one investor at a time, man. If there's somebody making their way into the live feed tonight for the very first time, I hope you get the message, and I hope everybody really understands the message that we're putting across, man. Independent investing. It's really, really powerful, man. It's really killer. But I had one, the very first question, man, hit the thread really early. It was from Big A, and Big A was talking about selling to safety. And, he says, can you talk about taking some profits and building up cash reserves for the coming downturn in the market? And I just thought this was really important. You guys really, really need to understand, if you're an independent investor, you have the benefit of taking 100% of your investable spectrum and piecing it up into pillars. All right. That's why I talk about the cash pillar all the time. All right. And if you're overexposed to the stock market, which everybody makes this mistake, it's fine. You guys just know I dropped 20 grand this week on stock, man. It was the wrong time to buy. It's fine. I'm not doing anything. All right. I still love the companies that I bought just as much as the day I bought them. I don't need to get emotional and sell out of the stock. But the idea is that you don't necessarily have to sell losing positions to accumulate wealth now or accumulate cash on the side. You have to be very, very careful about this. All right. Now, I sold 3 positions this week, and I will give them to you now. McDonald's, I sold. All right. It jumped up from the mid 150s into the 170s. I took a quick profit, took the profit off the table, safeguarded that cash. Philip Morris, I took that position from the low 170s into, the low 80s into the high 80s, almost $90, took that profit off of the table. And there was one other additional position that I took off the table this week. I sold 3 stocks. Every single one of them were winners. All right. So I took positions long in them. If the stock market was favorable, I would have loved to have held McDonald's. Okay. Not that it wasn't a good time to sell and take some profit off the table, but with the current market in its condition, I wanted to make sure that I had an opportunity to sell and safeguard some cash. It wasn't worth me allowing those 25 shares to ride in McDonald's. So I went ahead and took the position off the table. Same thing with Philip Morris. And there was one additional stock I sold. I can't remember it off the top of my head. But the idea there is that you're not panic selling good positions that you've entered into, had that money on the side. I really want you to think about building those positions separately, okay? Don't try to build cash positions from stock positions, okay? Unless you've got those positions that are trading positions. I mean, I've got over 40 stocks in my portfolio split between 2 accounts. So as I was going through, scanning through and trying to earmark those stocks that I was up in, I'm up in a few of them, but I'm down in a lot of them as well. There's just a lot of blood on the street right now. That's just the way of it. But I did take those positions off of the table, was able to safeguard $15,000 in the portfolio, which isn't much in retrospect to how much I have subjected to the market. But what you guys know about me is I've got my $80,000 on the side. It's been there for the last 2 years, not invested, okay? For times like this. And I'm going to monitor it next week, but I'm very, very close to shifting over a $10,000 block into the passive portfolio that I've got with my work, right? To take advantage of the passive ETF piece in the portfolio. I did not do that today, but you guys know I don't BS you guys. I actually, if I had more of an inkling and more time, I would have actually called and put that block over. So when I come out with videos talking about now is your entry point, you guys caught the video, hopefully, on the ETFs that I put forward, the top 5 ETFs. There were 4 ETFs and 1 index fund. All of them gave you S&P 500 exposure, all right? The reason why I come out with those videos is to say that if you have $0 to $10,000 ready to invest, today would have been a perfect day to do what nobody else today seemingly was doing. Now, there was a time in the middle of the day when there was some buying going on, but for the morning, it was heavy selling. For the afternoon, it was ridiculous, heavy selling, right? But you have to learn to swim against the current in the stock market, okay? You cannot go with the flow. It's a robotic, mechanical way of thinking to succeed in the stock market, all right? It really is. And when you guys are looking at entering into the stock market in some starter positions, this might be really, really difficult to mentally condition yourself to understand, but you will get there, okay? You have to have faith that you will get there and be able to weather those downturns in the stock market, all right? Because, yeah, I looked at it this morning and I was like, okay. I mean, maybe I'm sick. I don't know. I mean, I'm not. It's just my risk tolerance is more conditioned than the next. And that's what we're trying to do for you guys is build up your risk tolerance to the stock market to be a little bit more tough when things like this happen. But I thought that was a cool question. Thank you, Big A, for that. I want you guys to really understand, and I've preached this for 2 years on the channel, defensive positioning. What is defensive positioning? What are some strategic ways to make sure that you don't get overexposed to the stock market? Because eventually it will go down. And I don't know if people just monitored the stock market and just figured that because it was going up that it would continue to go up forever. This might be the very validation. And unfortunately, you can have guys like me sit in front of you and talk all day about how the stock market goes up and how it goes down sometimes. But until it actually happens, it doesn't really drive home that reality the stock market, man, is a humbling place, man. It's a humbling place. And the only comfort you can take, or the only solace that you can take, is understanding that your plan is solid and that you've got kind of backup plans. And the cash really is a form of a backup plan when you're looking to define the exposure amount that you need to put toward the stock market. So I thought that was a really cool question, and definitely in line with what we're dealing with today. So I'm going to kind of scroll down here. My good friend Brent is in the house here. Financial Investor is in the house here, lending his expertise on the group, man. He really helps. If you have questions for Brent, please just address Brent directly in the group there, man. He does a great job. I'm trying to talk and facilitate the discussion at the same time. So it helps me to basically have a moderator in the group here. So if you guys have detailed questions as well, don't be afraid to throw it Brent's way. He really helps me facilitate the discussion and get folks the help that they want. Larry Massa says Ryan's fired up. I really am. If you guys didn't quite notice, and I owe the subscriber base, I don't know how many out of the, going on 9,000 subscribers that I've got on the channel are still actively viewing the channel. But what I can say is, for you guys that are really devoted to the message and really get this idea of how powerful independent investing can be, I want to just provide you guys a debt of gratitude from me personally, because we kind of went off the grid a little bit while I was taking. I just got a $5 tip. That makes my night, no doubt about it. Now that I will drink to that. I will drink to that. So thank you. I appreciate it. It's almost as if we're in the Caribbean right now. So, but I do want to thank you guys for kind of staying with me and starting the Independent Investor channel up in New York City. You guys know I've relocated down here to Virginia, and we're still kind of letting the dust settle. Why do I tell you guys this? All right. You have noticed a difference in the upload schedule on the Independent Investor channel. If you haven't, I would be hurt by that. But you guys need to understand how much work it is for me to put all these uploads. I'm almost on a daily upload schedule, which is something that I never said I would do. It just so happens to be an interesting impasse right now with what's going on, and my obligation to my subscriber base and the loyalty that you've shown me. All right. So we will continue on this pace, at least through the holiday season. And I've kind of set a goal for myself. It's a lofty goal. All right. But I'm a money motivated guy. I'm money motivated as far as compensation and me personally. And what I'm trying to do is, the success on this channel is going to reside with me reaching as many people as I possibly can. So if you guys do have an inkling to share the message, bring them onto the channel, man. You cannot ask for any more visibility and clarity, transparency to a channel creator with as much experience as I have, that doesn't expect any compensation from the subscriber base. You guys are the folks that I'm actually trying to help. You guys are. And I had a few comments come through the channel this week telling me how much they appreciate some of the uploads that I put through. They said that the timing was good on the message, and that's exactly what I'm trying to do. I'm really trying to take and summarize a message to really relate to and break it down for a new investor to sit across from the message and be like, wow, that really helped me. I really needed that validation. And sometimes that little bit of encouragement, man, it really helps out. So that's exactly what we're doing. I'm actually kind of selling out a little bit right now. I just got a killer tip, man. I thank you so much. You guys don't understand, man. If this project, okay, the Independent Investor channel, I'll just let you guys know. And for you guys that are tuned into the live feed, I'm going to actually try to provide you a little bit more behind the scenes stuff of what's going on with the channel, etc. You guys need to understand, I have a grand vision for this channel, and eventually we will get there. And that grand vision means providing an opportunity unlike any other to the community that makes up the success on the Independent Investor channel. And that is you guys. Please note that every single bit of compensation that I get from the Independent Investor channel, I don't realize that, okay? It is building up in an account that I'm actually going to chronicle for you guys and let you know how I've taken that investment account, money where my mouth is, right? And building it up over time for the benefit of the group. Now, if this thing does end up getting big enough, some of the really loyal folks that I've had following me, and trust me, I keep track of all of it. The folks that are loyal, the folks that support my message, the folks that don't just obstruct my message, the folks that share my message, all right? I keep track of all that stuff. And someday, I will repay every single one of those folks that do all this following, all right? Because this channel, I watch other YouTube channels and it seemingly is all about them, okay? There's really no acknowledgement to how good the information is that comes across, or more importantly, how impactful the information. I mean, there's certain channels out there with 700-800 videos and they never actually talk about a retirement account. How is that possible? You know what I'm saying? And so I'm not trying to down on another channel. I am trying to be critical in saying, good grief, you've got the audience, man. Talk to them. Let them know what they need to know. And I really think that they just don't know, honestly. And that's a lot of what I try to keep in mind when I'm addressing the group is if I'm a new investor and I'm sitting back, how can we bridge the gap? And, you know, another thing with all the divisiveness going on right now, with all the lingo, you know, you got letters flying around. I mean, the guy was arrested today, which is a good thing, man. They arrested the fruitcake, and I hope they lock him up for the 50 years. That's a big deal. But they found the fruitcake sending those letters to people. And, you know, the divisive lingo that is going on right now in this country and across the world is crazy. You know, it's crazy. And it's really ironic how a topic like finances can bring people together. It really can. I don't care where you're from. I don't care what color you are. I don't care what gender you think you are. I don't care. This is something that can bring financial peace to you, your family, you as an individual, you as a business owner, you as a hard worker. It doesn't matter. This topic brings us together, but it takes somebody to show you how to do it and do it correctly. All right. And there's a real divergence in what the mainstream media is trying to sell hardworking people on, or especially second generation and third generation investors on, and what the independent investor niche is trying to get you guys to realize how you can take this path over here and how drastically different those paths are. All right. So I just want to thank you for sticking with me. We're going to continue on this higher pace as long as I can, I guess, until I fall over, to be honest with you. But I'm having some fun right now. If you guys can't tell, this live stream is a little bit different for me. I get to come on and converse with the group, and I just love it, man. I love you guys, and I really think that we're building something special here. And I just want to thank you again for supporting the message. Let me get back to the questions here. I'm going to try to scroll through here and really pick out some of these. Retail investors have actually been doing a lot better of keeping their money in and buying the dip. They said the biggest flood of money went into the markets on Wednesday. That's exactly correct. It's amazing to me how I monitor some of this panic selling that's going on in the stock market right now. It's just crazy. You know, you can tell people until you're blue in the face, stop doing things. Don't do anything. And I've got John in the group here. He says this: I can say with your guidance, I haven't done anything these past 2 to 3 weeks. Haven't sold, just watched the entertainment of everybody panic selling, laugh out loud. That's so true. And there's another comment in here from John who talks about a Reddit thread where somebody's going in there and just generating discussion for the sake of generating discussion. And unfortunately, people do react to money topics like that. They react to it because it's a sensitive topic, man. And if they're ill prepared for a downturn, they're an easy target, man. They're easy. It's like falling cards, man. It's like a house of cards. It's crazy. Once you start to generate that conversation, And you guys have to understand why I come out with those videos showing my losses for a particular day, okay? I show those for the sheer purpose of showing you that it's not all about roses in the stock market. There are absolutely up days and there's down days. And I just want to demonstrate to you guys, not to scare you out of the stock market, but to explain both the pros and the cons, man. I've been watching, again, the landscape has been crazy the last couple of years on YouTube. And it's like I got on there and just the way that they talk about the stock market, and I'm sitting there going, whoa, 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 is this a different stock market that I'm used to? You know what I mean? This is, they're talking about a different stock market, one that they can just frivolously throw money, buy on margin, you know, just throw on crap stocks, man, and just think that they're going to make millions of dollars in the stock market. That's not the stock market I know. No way. This is the stock market I know. All right. You want to have guys like myself, and I'm just a singular opinion, and I am wrong a lot of the times in stock market, but so are the professionals as well. All right. But there's going to be a lot of the times, man, when we're right. And being right in the stock market typically comes from a roots in experience. That's what typically allows someone to know exactly how to stay grounded in a situation like this when we're going through such volatility. All right. So let me kind of scan through here, guys. Amazon's coming down and smart investors are shifting their money into Sears. Absolutely. Absolutely. I totally recommend, actually, you can either sell all of your Amazon and buy either Sears or Tesla. All right. Now, Tesla actually had a great report. They actually started making money. It was actually very positive. I would still be careful with the dialogue coming through YouTube about Tesla I just think there's so much more value in the stock market right now. I'm going to premise my 5 stock picks that you can buy in this turmoil. I'm going to give you the picks tonight. I will be coming out with a 5-pick video as well and pushing it out through the masses to YouTube. And I'm going to provide those to you guys this evening. Why not? Because we can, right? So let me kind of cruise down here. I want to make sure that I don't miss any questions this evening. I missed some questions last week and I was pissed that I did. So I want to make sure that I kind of have an opportunity to get this. YouTube does jump around on this feed every now and then. So while I'm talking, it'll throw a bunch of in the feed and it's kind of hard to follow sometimes. John says he's grabbing a beer. This will be a good live stream. It really will. Hopefully there was a lot of inherent lessons the last 3 weeks. Honestly, this is the time that you sit back for a second and assess the damage, if any, kind of assess what it is that you can do to give yourself options now. But again, the last thing I would hope for anybody in the group that they sold out of their stock for a short-term emotional feel-good, second only to regret it next week when the stock market turns around. We do have some headwinds in the stock market coming up. The one that doesn't get talked about very often is the midterm elections. I actually think the uncertainty in the stock market with regard to who is going to control both the House and the Senate is some of the underlying ripple that's going through the stock market. The stock market, in my assessment, does not like uncertainty. It does not like it. All right. And there's only so much event that you can throw at the stock market of uncertainty without it taking a hiccup and getting cranky. It's like a little baby, honestly. The stock market's like a little baby. I wish we had it tougher, but we don't. These little incremental increases in the interest rate should not ripple the stock market the way that it has, but it has. It's just ultra sensitive to ripples like that, and it's trying to price in that right now. And as it passes through these technical levels, it's trying to find a bottom with all kinds of frantic selling going on right now. All right. So we kind of cruise through here, see if I can't get some questions. It's Q&A session, guys. So if you have questions for me, please throw it in the group here, man. It's been a crazy week in the market. How's everyone on this fine Friday? We're doing great. I'm feeling great. It's been awesome. I wish I would have had more opportunity over the last couple days to buy stock, but I really just didn't. I've got Doug Whitaker on the line here. Well, better stock up, laugh out loud on the booze. This roller coaster ride's going to continue in to the new year. Our opinions differ. You could be right. You could be wrong. If you're wrong, I'll be right and saying that this is going to be entering into seasonality. And I actually think that the time that you may need to worry about the stock market or start to defensively position is going to be February, March of next year. I just think with seasonality coming in, the stock market typically does pretty good around the holiday shopping season. And I think we're going to be done with these midterm elections and we're going to know where we stand. Okay. Depending on how the elections go, whatever your political affiliation is, depending on what happens in the House and the Senate, there may be enough reason there for the stock market to think that we cannot stay on pace for this GDP growth that we're holding. And if you want to give credit to Obama or you want to give credit to Trump, I could give two shits. I could care less. Okay. I don't. But what I'm saying is here in less than a couple of weeks, we are going to know for sure who controls the House and the Senate. All right. And the stock market is going to take that either positively or negatively based on that outcome. All right. And I think with that uncertainty behind us, we've got the holiday season and seasonality to move into. Now, with that said, you're making that statement when we don't have earnings from both Facebook and Apple, which is what I'm seeing next week as being a really interesting. It's going to be really interesting stimulus because if Apple can surprise, it may actually start to right the ship in what's been a technology disaster. All right. This is not uncommon in technology. This is why I love it so much. It's a violent sector. It's violent to the upside and it's violent to the downside. All right. It's completely normal. All right. But it will be interesting to see what Apple brings to the table next week when they report earnings. That may be kind of one of those stimulus that kind of turns tech around a little bit because I think there's some abuse going on. I think the sell-off in Amazon is actually legitimate. I do. I think they deserved it. I do. I own 5 shares of the stock. That's fine. I'm continuing to hold the stock long term. But the beat up for Google, maybe not so justified. And Facebook is another one here that just continues to get even more interesting. I mean, its price to earnings ratio, if I'm not mistaken, has fallen below 20. That's insane. That is insane. If you had a company like Facebook 10 years ago post the earnings that they have been posting with the multiple that they're trading at, you would have never, ever got this discount on a stock of that caliber with $500 billion of market cap. It's insane, right? So Apple will be a turning point. You could be right, Doug. We could keep this volatility up. Who's to say? I think you're wrong. I think this is actually a very interesting, sharp correction, a normal correction within a bull market. That's just what I think. That's my opinion. All right. Let's see. I got John here. This is the comment that he talked about here. 6 months emergency fund saved in high yield savings. Wife and I both fully invested in the IRA. Perfect. Contributing to the 401ks. And we're just loving this hysteria. Reddit has been the most entertaining. Yeah, that's something else, man. It's really unfortunate. It stirs up a lot of drama for people, for a lack of better terms. And a lot of people just need support, honestly, to understand that this is absolutely freaking normal. It's freaking normal. Stop losing your freaking mind about something you can't freaking control, right? It pisses me off when so many people think about everything that they can't control in the stock market, and they can't just take one freaking second and look in the mirror and say, what is it that I can control? Stop being a sissy. You know what I'm saying? Look in the mirror and say, can I save more? Can I budget more? Am I overexposed? Did I ignore Ryan's advice and overexpose myself to the stock market? Am I throttled in the stock market just as much and I'm losing just as much as everybody else? Or did I listen to Ryan and enter into an individual Roth account of a self-directed nature, and I have a strategic advantage, and I know it in my heart that I have a strategic advantage? Those are all things that you can feel good about if you're being paid dividends, if you have money on the side to take advantage of these dips and maybe do a little strategic buying. Those are all things that you can control. What you cannot control is panic selling. You can't. I mean, what are you going to do, man? Warren Buffett says all the time, the stock market doesn't give two craps about how you feel about your stock going down. It doesn't care that you are, oh my God, what do I do? I'm watching the stock market go down. The stock market does not care. All right. The trick is to control those emotions and more specifically, control your plan before you enter into the stock market in the first place. That's why I come out with videos. Before you invest 1 red cent, watch this video. If you were looked back over the chronicle of 207 videos that I've put out there for you guys as a gift, a lot of those validations will make a lot more sense now if you went back and watched that content and you said, holy Ryan's talking about this stuff, man. I didn't really see it at first. Now I understand exactly what he's talking about, man. Maybe I'll be a little bit more careful next time. Or, hey, man, I listened to Ryan talk about defensive strategies. That was legit information. And it is, man. It is. You got to approach the stock market like it's a freaking war. You got to do it, man. Got to do it. Got to approach it like it's a war. It's not a joke. All right. It's not a joke. It's not a punchline. It's not one of those things that you can approach and be frivolous and careless with, because remember the video that I talked about controlling how close it is to the fire? Man, I came out with that video for a reason. And I come up with these videos, man. I have a pretty good imagination. I have so many topics to deliver to you guys to really help hone your skills in understanding that if you can think about the stock market as being a tool to be utilized for your own financial success, sometimes you're going to get too close and you're going to get burned. That's fine. You can back away. Sometimes you'll be a little bit too far away and you want to say, maybe you speak to your spouse and you want to say, you know what? I don't think we're doing enough. Let's step a little bit closer and see if we can't get a little bit warmer by the fire. You know what I'm saying? It's important. It's important to think about the stock market from a strategic manner instead of just a frivolous, just throw your cards on the table, man. Because the people that I'm speaking with need to understand that when I started in the stock market, I started out just like you guys. I didn't have a thing. I don't come from money. I don't start my YouTube channel because my mom and dad gave me lots and lots of money to start a huge business, right? And then just fall into success because I somehow was bestowed upon success. No way. No way. I've earned every penny that I've got, man. And there's a lot of people out there just like me who, are rubbing pennies together, man, to make the ends meet. They're really having to find that $25 in their budget, to make ends meet. And that I have a heart for. And so that, with every word that comes across, man, I'm trying to get those motivations for you guys that I know are in the trenches right now, trying to seek a better life for yourself, man. Absolutely. We try to get to some of these questions, man. Also take a quick profit. I got Brenny Feliz, man. Very loyal. Want to address the question. Hey, Ryan, after retirement, where and how would you allocate all of your money? You really hit on some awesome questions. And so for you guys that are tuning in, and I can just tell you mine, I'm very, very lucky. Okay. First and foremost, I'm a servant to this country. Okay. A lot of why people join the military is because of the pension. All right. And I know I have a lot of military members in the community, and I'm going to be coming out with a military week just as a thank you and a give back to my shipmates. Okay. I'm very, very happy. All right. So a lot of my investing strategy, technique, aggressiveness comes from the fact that I do plan on having a pension with my work someday. All right. Now, I do have the employee-sponsored military program where a lot of you guys have 401k. I have the TSP, okay? And that's not stuff that I disclose through YouTube, all right? I just told you I have them, and that's really all you guys need to know as far as visibility. I will never, ever disclose that through YouTube as far as, the amounts that I have in there. I do talk about my allocation, but I typically don't talk about the amount that I have in there. And I contribute pretty aggressively to that. And that's the passive piece that fills that passive piece in my portfolio that I talk about all the time, how important it is for you guys to have. If all you have is a 401k and a self-directed Roth, you can build that 401k up to be the passive base, and the self-directed account can be that little more aggressive account. But if all you have is the employee-sponsored account, right, we have to try to maximize that opportunity in the 401k. And it's hard to do that because the products within a 401k are much more restrictive and a lot more passive in nature. They're built to be passive for people who just want to fund the account and never look at it, all right? The self-directed account gives you that much more freedom and flexibility to look at it like the tip of the iceberg, right? And build upon your existing 401k account, all right? So after retirement, man, you know, it's interesting to think about. You know, I'm 41 years old, woulda, coulda, shoulda. Wish I would have had self-directed accounts when I was 20 years old. I wish somebody would have told me to get involved passively when I was young and not touch it. You know, if I could go back and talk to the 20-year-old Ryan, that's exactly what I would do. There's a reason why I offer the VTI and the VOO to you guys. There's a reason why I do it. Because I know that if you're $0 to $10,000, you really don't need to be looking anywhere else than becoming an investor in the stock market as diversified as you can with the lowest expense ratio, right, in the correct account. If you can get those three things in line, you will win the battle long term, okay? Because everything that we're talking about with the stock market volatility, it's all a short-term snapshot of the stock market. And between me and you guys and coming on here and seeking some clarity from me for what it means or for what it's worth, it doesn't mean a thing. All right. What's gone on over the last 3 weeks doesn't mean a thing. All right. And that's what I talked about when I came out with my 5 passive S&P 500 exposure products, is that I expect that that's not going to be something that you invest in and then it just makes you rich with that one investment. It's going to be the first investment over the course of your life, all right? It's going to be the first of a long succession of funding that account up over the course of your lifetime. And that's what a lot of people don't understand, is I'm putting that cornerstone in place for you to be built upon going forward. All right, I'm giving you the best gift that I can in getting you started off on the right foot and in the right account and in the right product. All right, and so many people jack that up. If you can get those 3 things right, then you'll be off and running. All right, you really will. All right. I hope that answers your question, Brenny. That's a good question. I tend more to care about my plan than I do having a set amount of money in the future. Look, man, I've been broke before. I've lived on a boat before. I lived on a commercial fishing vessel for 7 years. I didn't pay rent, all right? So you want to talk about driving perspective into somebody's head about what it is you think you need in life, all right? I've had nothing in my life. So everything that I have right now is a gift, man. It's a gift. So why would I look into the future and say, I'm going to work really hard toward the future because someday I can be happy? No way, man. No way. I'm happy right now. I'm happy right now. I'll be happier in the future with whatever it is that I'm able to put forth in my plan. I care more about my plan than I do about having X amount of dollars, which I can withdraw upon per month. I just don't think that way. And I hope it is that you guys can see that perspective is everything, man. I know folks with 7 figures in the bank and they're miserable. they're miserable. It's all about perspective. Never ever be in a position where your money controls you. It has to be the other way around, where you control your money. It just has to be that way, man. It has to be. All right. You betcha. I got Bob right. So my home is Roseburg. So I'm an hour south of Eugene. I haven't been back there in 20 years. I've got my good friend Bob Wright in the house, my good friend of the channel, I really, it's really cool, man. Some of the relationships, you know, I'm not going to get on YouTube and be something that I'm not. I won't do that. I've had a few interesting comments come through about, you know, needing to have more charisma or needing to be more controversial with my statements. And that'll help build my subscriber base, because that's the only thing that's important on YouTube, seemingly, right? Your subscriber base is your measure of a man, right? I just disagree wholeheartedly. I do. I want to build the channel based on great relationships, ones that I've got, and support the guys that sit across from me. And I think there's a lot of folks in my subscriber base that have a very good BS filter, honestly. And I think they can probably sense BS from a mile away, just like me. So, Bob, absolutely. Go Ducks. I'm with it. That's very cool. That'll always be home for me. I'd like to get back there someday. Thank you for bringing it up. Brent VTI, that's a question for Brent. So I just had a bunch of questions jump in the group here. So I just saw Lydia Santiago come in the group here. I will continue to give her weekly shout outs until she stops coming into the group, which probably won't ever happen. Welcome to you. Keep creating that cool content, man. You're doing a good job getting people excited about investing. The volatility has been kind of cranky, but just stay strong in there. I'm going to try to scroll up here and pick up on this thread, which just threw a ton of questions into the group here. I want to thank everybody for your involvement. I'm going to try to find my place again here. I got Brent in the line here who's answering a lot of questions, and I thank you. Hopefully the earnings report on GE would be good with the deal with Iraq. That's Hector Mendoza. I'm rocking out a question on General Electric. I'm just holding the shares here, man. It's been very disappointing. I think the change of leadership has been good and will be good. Hopefully they get out of their own freaking way. The problem with General Electric is they got complacent. That's it. They started running that business, which was enormous. They got too big for their britches, and a lot of people were taking advantage of that because there was no accountability in that outfit. You guys want to know what type of accountability standard I'm held to in the military? If I screw up, I'm gone. That's how it works. And there needs to be more accountability like that in big corporations as well. I've got John right below. There's so many people who just buy meme stocks on Robinhood because they don't know any better. It blows my mind. So my Robinhood rant is very, very simple. It's very simple. There's a lot of folks out there, a good friend of mine with the channel as well. I've endorsed him since he's been very small channel. But Nate O'Brien is another one that I highly endorse. Just a great, great guy. Very sincere, freakishly smart. He has what I consider AI, which is artificial intelligence. He's super smart. He gives me hope for the younger generation in this country. He's super smart, but he uses Robinhood in a way that I wouldn't recommend. I wish he'd listen to me and start a good Roth IRA account. He probably has, honestly. But to buy and hold stock in Robinhood is somewhat counterproductive, because aren't you starting Robinhood to get free entry into and out of stock? So it kind of promotes trading, because that's the very benefit that you're getting into Robinhood for. The problem with that is it promotes short-term trading. So before you even know it, you're kind of stuck in a hard place. I mean, if you wanted to exit positions in Robinhood right now, you couldn't do it, because you're probably stuck in the position because you've held the name less than 365 days. So it's kind of a tough scenario to use Robinhood. Now, if you've got the good retirement account started, or you've got the M1 account started, and you need to start a brokerage account, go ahead and do that if you're really sold on the Robinhood platform. I just don't think Robinhood holds a candle to Merrill Edge, my platform, or any of the other major brokerage houses like TD Ameritrade, Chase, JP Morgan Chase has a wonderful self-directed program, I've just come to learn. Excuse me, Charles Schwab, Fidelity, some of the major brokerage houses, I don't think they hold a candle to the analytics and data available in those platforms than they do. But If you really want to choose the brokerage house for the entry and exit to make accelerated earning, you can use Robinhood in that manner. I just think a lot of people don't have that idea when they start the Robinhood account. Maybe they were referred to the account as being a great product as far as the entry and exit fee. And then you get it and you're like, wow, gosh, either a lot of people are trading in and out of stock and they don't understand what they're doing. You know, they're creating a lot of taxable events. But the way to actually use Robinhood in the correct manner is to buy and hold stock within the account. All right. That way, at least you can get yourself into that long-term capital gains category. But, you know, I'm one of those that believes, man, for the freedom and flexibility in the Roth IRA to trade stock, and if I make $1,000 tomorrow on the stock and be able to trade out of that stock and lock in profit tax-free, that's way more attractive to me than going with Robinhood and taking that same trade from a short-term basis and paying tax on that $1,000 as earnings. Okay, so that's my quick breakdown on Robinhood. You guys know I'm not a fan. I'm a bigger fan of M1. All right, I just think it's a better platform. It gives you more service and it gives you access to retirement accounts. That's a reason enough not to hold a Robinhood account, honestly. And that's just hopefully that helps you guys. I know there's a lot of folks. I know Lydia uses Robinhood as well. And I think she uses it for, it turns back value for her because she also has a retirement account as well. And that's the only time that I can justify having a Robinhood account. But you don't want to have a Robinhood brokerage account at the expense of a good retirement account. You don't. It's just the wrong order to invest in. That's just the way of it. All right. Let me cruise down here. I want to make sure if Brent has questions for me, man, I just typically usually answering a lot of the questions in the group. Lydia's in the group. The constructive criticism is good. That is how you learn. Always feel free to give me input. I tell you what, man, that attitude is crazy cool. Americans are somewhat sissy on taking criticism. I like it as long as it's done in the correct manner. I'm going to forecast a video that I'm coming out with. And I had one of the subscribers come into the group and comment on my video where I lost $5,000. I threw it up there and she said, well, investing is like gambling. And I said, look, you know, I really respect your comment. And I said, you know, I respectfully disagree. And here's why. And then I was responded to in kind of a way that was just trying to promote an argument, honestly. And I just think, you know, the way you're going to evolve and learn in the stock market, I've learned to humble myself in the stock market. Like I take a Socratic method in approaching the stock market. Know you know nothing and you will succeed. I mean, if I had never listened to somebody say, Ryan, do you know that self-directed investing even exists? Do you know that you can have the same Roth IRA account? It's just redesignated as a self-directed account. And I was like, no, I never knew that. I do all the work anyway. You know, my broker sits back and makes all the freaking money and I take all the risk and he still makes his management fees. You start to ask those questions, you know, I would have never been turned on to the wide world of self-directed investing. And I just can appreciate the heck out of that. I really think we have a great group. I wouldn't ever hesitate to offer some constructive criticism. At the end of the day, hell, I could be wrong. You know what I mean? I mean, Robinhood could be the greatest thing since sliced bread. You may be getting extremely great value out of it, you know? But what I'm saying about the tax implications, that's not opinion, that's just fact. You know what I'm saying? And if you choose to use the product in light of what you know about the tax implication, you might be able to avoid what I got in trouble with the IRS when I was doing the exact same thing on Scottrade some many years ago, trading in and out of stock, not knowing that it was creating a taxable event each and every single time I did that. I'm just the wiser now. So I share that advice for you guys. Absolutely. REITs are good in Roths, but not standard brokerage accounts because of the tax shelter that the Roth provides. Yeah, there was some confusing dialogue that came across the channel this week about holding the limited partnership, the Blackstone Group, within the Roth account and somehow having to pay tax on that. Any asset that you hold in the Roth IRA account, is going to be tax protected if you withdraw those gains after 59.5. So very, very simple, but worth repeating. It's worth understanding your benefits there. Is this the top independent investor? I'm not sure what you mean by that, man. Clarify for me. I'm pretty smart. I don't know what you mean. Is this the top? I would say that a good question is this the bottom? Is this the bottom? I hope so. Maybe. Hell, I don't know. I don't know. We'll see next week. Unfortunately, next week, we're still in October. This has been the worst month since 2008 in the stock market. It's been horrible. No doubt. I'm not going to sugarcoat it. No way. I'm not going to sugarcoat how bad the last 3 weeks has been in the stock market. It's been bad. So I got K97 here, man, a very loyal subscriber to the group. Patriot One Technologies announced a partnership with Cisco. Wow. Could be real. Find it $2. They should have more news coming. Check it out. Cisco's at the top of my list. That kind of actually rolls me into what I'm going to talk about next. I'm going to give you my 5 stock picks. Since you guys seemingly like stock picks, I'm going to roll these out to you guys. These are stock picks that have seemingly been the cream of the crop. It's been the clarity through the noise, if you will. Cisco is one of those I'd probably like to take a 100-share position on. I may do that next week. I may put Cisco in the portfolio. That's fantastic. I just love their business anyway. But the 5 stocks that I'm going to be coming out with a video, I'll probably shoot the video tomorrow, but I'm just going to roll out the stock picks to you guys rapid fire. You guys saw the first one, Intel. It was really the shining star in technology. It's down huge this year. It came off the highs. It had a great quarter last quarter, and this quarter was another blowout quarter. And at $44 a share, Intel is where it's at right now in technology. It's a very good buy. I like the resiliency in Apple, but Intel in the chip sector that is getting annihilated no matter what stock you are. Intel, I've been beating this drum for a while. If you guys want to take a position in Intel right now, I give you the green light. That can be a cornerstone in the portfolio. Second is Boeing. Boeing had a blowout quarter. If you want to add some industrial exposure to your portfolio, I give the green light to Boeing. I will be looking to do the same probably as early as this week. Boeing is an absolute beast, and Boeing will get it done for you if you were looking to take a great position in the best airplane manufacturer in the world. Boeing's it, and now you're probably getting a pretty good entry into the stock. The next one's going to surprise a lot of you guys, and you guys can call me a sissy if you will. But I would like to challenge any other YouTube creators out there to talk about this fine stock, Estee Lauder. You bet. Watch them report earnings. Their exposure in China is huge. Estee Lauder, high growth, high value, high moat with their product offerings, the beauty and cosmetic products. Estee Lauder is up there. Ulta has just run to the stars. But Estee Lauder is one that I'm actually going to be looking to take a position in this week as well. FedEx had a great quarter last quarter, had another great quarter this time, and it's getting caught up in the sell-off just like everything else. But FedEx is stock number 4 that you could look to take a position on in the industrial sector. The number 3 pick that didn't make my list is Caterpillar right here. Caterpillar's a buy wherever it ends up, but it's a little bit more exposed to the uncertainty in China. But once China turns the page here, Caterpillar should find its bottom and actually start appreciating in value instead of just losing value for no reason. It's still the same great American company that's always been, or that it was last month, but it's been getting annihilated here with the rest of the stock market. But Caterpillar here is also a good entry, but FedEx made my list. And the final one, you guys can throw tomatoes at me if you want to, but Facebook is ridiculous. I want to cuss, I really do. But anyway, Facebook is absolutely providing you an opportunity to get into this amazing money generator. And I think they're sitting in the shadows waiting to pounce. They report next week. That's another one of those on that FANG side of the house that if they can actually surprise, which is going to be a stretch. I don't think they are. I think they're going to be hurt by the additional security costs that they've had to take on But whether or not you're going to invest or take a position in Facebook, there could be a huge run up to the upside if they surprise. There could be a continued downturn. My question is, how much downturn? Don't you guys feel like there's somewhat of a downward protection in Facebook with the amount of money that they're generating with regard to how valuable the properties are and how valuable they are to their customers? And I'm talking about the ad revenue space. I'm not talking about the daily active users of 1.5 billion on Facebook. I just think right now, it's very easy to beat a stock when it's down. It's much more difficult to do what I talk about all the time, and that's swim against the current and look at a name like Facebook right here, which is with Google as being really the ones that you want to pick up. I don't know if if you want to take a stab at Amazon and throw a dart at a dartboard, go ahead. I'm stuck in the name. I don't have a choice, so I'm going to have to write it down. I actually thought about plussing up 5 more shares today. I did not. I exercised my right to hold my shares in Amazon. I didn't think it was that bad of a quarter. I didn't. I looked at everything. I'm invested in Amazon for their cloud business, not necessarily their legacy Amazon, but they have so many strong businesses across their suite of offerings. It's a great company to own, and I love investing in the company. I just wish I had invested in it at a more opportune time. I mean, who knew? You know what I'm saying? But we're going to hold it. We're going to hold it, and we'll be fine with Amazon long term. We'll be just fine. But those are my 5 stocks right there for you guys. I thought I'd turn them out to the group for you guys that have been with me for a while. We've been going over an hour. I have no problem with staying on the line here and kind of cruising through here. I really want this to be more Q&A. I got Hector Mendoza's offer in VOO, VTI, VB, VNQ. It's a good way to go as well. So maybe talking to somebody else. I've got Jeff Asper on the line. But most Americans aren't prepared for a downturn. Something like 70% of Americans live paycheck to paycheck. That is absolutely 100% correct, man. It is absolutely correct. And that's why, Jeff, I talk all the time about trying to I just think Americans get unfortunately caught up in the temptation and the customer experience. You know what I'm saying? Like, we're supposed to be consumers and just spend all of our money like idiots. Seriously. No doubt. To your point, man, I couldn't agree. And it's more and more visible to me when I go someplace like Europe, for example, and I'm walking down the shelves of the supermarket and I'm grabbing everything off the shelves. And I've got many, many other people there who are picking up their groceries for the day, and they're very careful with selecting their items. Why? Because they don't live paycheck to paycheck, man. They live month to month. Like, it's difficult. Like, it's more survival there. In the United States, people are naive to the fact that we are provided a lot of those basic benefits here in this country, and really are naive to that. I couldn't agree more. And I think, unfortunately, we bastardize that. And I think that's why a lot of countries out there really look at the United States as in a way that, like, what are you bitching about all the time? You know what I'm saying? You got it made, which is true. But I do agree with that. I think a lot of folks are living paycheck to paycheck. I've been there, done that. I really have. And I think a lot of accumulating wealth has a lot to do with your mental state of mind and just wanting to seek out more. I do. I think there's a lot of people out there who don't look at themselves in a light of aspiring to greater wealth. But I think there's a lot of people that do as well. And we're trying to provide that avenue to those folks to understand, what options they have out there. Because, most people, if you're living paycheck to paycheck, or you do have a little bit of discretionary income, I just think most people don't understand the many options they have, and they end up going with a financial planner thinking that they have a strategic edge, and they don't. All right. And this is a way for those folks to maximize their dollars. The program that I have as a self-directed investor, and someday I will be coming out with an education course. Okay. And it's going to be really, really good. It's going to be awesome. It's going to walk down everything you need to know about self-assessing, where you are, what you want to be, what your goals are, what your risk tolerance are, what type of assets are going to be in line with making your goals. But it's just so important for folks to understand that those people who are living paycheck to paycheck, this program is tailor-made for you. It's tailor-made. It's perfect for you. All right. There's no amount of education that you're going to supplement by joining a stock market group, or paying $500 or $5,000 for somebody's investment education course. You're not going to be given some sort of strategic advantage in the stock market by giving your money away to somebody else. My thing is to channel those dollars into a program that maximizes each and every one of those dollars' potential for future growth. That's a key takeaway. Key. And thank you for that statement. I do agree with you. I think there's a lot of waste all over, but Americans are really, really good at being wasteful. We really are. We really are. Someday, hopefully, I think we can clean it up, hopefully, and start to kind of understand our obligations first to ourselves and our obligation to the rest of this world. Esteban Avia, greetings from Costa Rica, guys. I recently opened a foreign account and have started investing following Ryan's advice. Absolutely. I saw your email in there and it's earmarked for reply. You guys need to understand, if I don't reply, but I do remember all that stuff. If I don't reply, just give me a few days to get your reply. I'm glad to help, man. All of the answers are through the channel, and I'm getting a ton of direct assistance requests. I'm being as selective as I can because I really just only have so much time in the day, and I'm being as aggressive on helping as many people as I can. And I look forward to responding to your specific email. Thank you for hitting me up directly. I very much appreciate that. And thank you. Stick with the channel. Don't get into a rush. Don't get overzealous. Don't think that you can't just kind of take your time a little bit and feeling this market out, because as it starts to come down, you're getting more and more of a buy point or an entry point into the stock market. And I think don't wait too long, okay? Because I think you've got pretty good entry right now, actually. So let me go ahead and scroll down here. Esteban is in the casa. I think the worst is still to come. 1979 wood. You very well may be right. It typically, recessions typically are unspottable, and it's amazing to say that. But when you're in a recession, it's typically usually it has taken its course. It's not like, and people say, well, I can buy the market or sell the market at the top and buy at the bottom. That's so impossible. It's not even funny, for reasons that hopefully you guys are validating, in that when the stock market gets violent like this, you really never know if it's hit its top or if it's, trending down for good reason or what. Again, I think perhaps maybe it's not going to be that way in the short term. I think middle of next year or spring of next year is where we might want to be a little bit more aggressive with defensive positioning. But as far as thinking that this is like a recession, guys, this is normal. This is a correction, in my opinion. It's not the start of a recession. Based on, I have a hard time believing that we're going to enter into a recession with 3.5% GDP growth that came out today, and nobody talked about it. It was amazing. The mainstream media was way too busy talking about the stock market falling out from under itself. And it's crazy not to acknowledge. And, if you would have told me that we would have had over 3% growth and we would have been correcting in the stock market, I would have shook my head and said, what? I'm stoked with where the economy is right now. And if we do end up shaking things loose with the Chinese, that's going to be another headwind that actually turns into a tailwind. All right. So if we get some dovish lingo out of the Fed with regard to their planned interest rate hikes, that could be another headwind that turns quickly into a tailwind. So I disagree. I think this is short-lived. I think we move into seasonality, and I think we actually end this year higher. There's really no excuse as to why the underlying economy, which typically is not reflective of what the stock market is doing, there's no real reason why this year can't finish the year higher. So I've got Jared Odell on the line here. Good evening to you. It's awesome to see you. I struck up a conversation, Jared, about the hedge fund managers really getting killed here. and how crazy it is to give away 20% of your money to ask for that active management. They're just getting absolutely killed, and they're coming up with every excuse as to why over the last 10 years they've underperformed the stock market. And I was wondering if we couldn't drum up some sort of, if you've got any type of literature on that topic, I'd be really interested. It kind of goes to the point of what we're putting through on why we encourage independent investing so much. You know, you may make mistakes in the stock market, but you're getting such a wide playing field to maybe make a few mistakes here. But man alive, if you just give away the farm, you know you're in a losing proposition, you know, with a managed situation, because they can just consume so much with the fees, you know. It's really good to see you in the group tonight, man. What do you think about Mohawk getting absolutely crushed? I did see that. I don't know much about Mohawk. If one of you guys in the group does, you can please respond to Big A in the group here. I'm just enjoying the hell out of myself right now, so I'm going to continue on to roll and see if I can't get down, settle down wood. I think the worst is still to come. Maybe. You know, everybody's entitled to their opinion. Maybe you're right. Maybe this is the start of a recession. I don't think it is. That's my opinion. And I will still continue to stay long in the stock market. If it's a recession or a correction, my plan changes nil. Right? So it doesn't really matter. Again, focusing on those things that you can't control instead of focusing on those things that you can control. All right. I've got Doug in the line here. We'll hang on to your belt buckles. This ride's going on for a long time. Yeah. I mean, again, you could be right. You could be right. We'll see. We will see. We've got a couple things that we need to work through with regard to the midterm elections, China, interest rates rising, corporate profits is another thing that I'm looking at. So a lot of things absolutely to talk about and reflect upon. I just think that was kind of an oversensitive reaction to the Amazon report, man. I mean, Jesus, it really got crushed. It got crushed like a penny stock, and it's hardly a penny stock. One just giving you a heads up. I got Joni 5-2. Do you buy on the dips down, or do you look for the bottom then buy, or do you average down? And how much of your power do you use? That's a really good question. I use both of those strategies. I don't think picking a bottom is possible. I will give you an example of a buy that I made that I think I got the bottom in. And that is both JD.com, number one. Number two, Alibaba, which I have just recently added larger positions to. I think JD.com could be a doubler. Okay. I think Alibaba could also be a doubler. Okay. So there's no real telling where a bottom could be. As a value investor, I look at a company like IBM and think that I bought at the bottom at 130, and I didn't. It continued to adjust down. So does the option to average down in a company like IBM come into play? Certainly. I went a little bit aggressive in IBM for the 5% dividend, and I was actually happy with the quarter. They're a money-making machine. They really are. I think from a valuation perspective, I think I probably could have held off on IBM because it trades at a fairly rich multiple at 20 times forward earnings. I really do. I get that. But from a value perspective, I've watched IBM work from the 130s to the 170s, and it's still the same company with a lot of transitioning going on. That transition's been going on for the last 3 or 4 years, right? So when I look to take a position in a company like IBM right now, I take all that into consideration, and I'm looking at a position of 130, you know, as a good entry. Okay. Now, eventually I'll come back to 130 and it'll head back to 150. I'm fine with that. But it's a really interesting question, man, because you kind of have 3 questions in one, because the very first thing you said is, do you buy on the dips? And what I considered doing today is rolling a $10,000 block into my employee sponsored, basically index fund. So actually buying the index. Okay, I did not do that, but I did consider doing it today to help maximize that maximum cap that I've got in that account. But I consider that strategic buying. The one thing that you didn't mention there is dollar cost averaging, where you just invest the same amount every 2 weeks or every month into the account, no matter what the stock market is doing. That's a little bit stronger approach to the stock market, as opposed to being a little bit more reactive buying like I like to do. I mean, I like to buy on days like this. That's why I came out with the video that I did saying, look, if you want to take a starter 5-share position in the S&P 500, go ahead and do it right here. I'm not saying that you're catching the bottom. What I am saying is it's adjusted back 10%, and the new trading valuation is at 15 times forward earnings. That to me is good, right? We've had the worst month since 2008. Is it going to keep up like Doug implies? Maybe. I don't think so. I don't, because I've seen these things come and go so many times that when it seems really, really bad, it's easy to forecast more bad. That's just the mental approach to it. And I will honestly sit across from you guys. And that's the cool thing about me, is that I'm transparent enough to sit across from you and admit that I'm also a human being too, subject to error. I honestly, that's why I think a lot of people tune into my channel, because I'm real, you know. I mean, I could be wrong. But for the sake of discussion, I think the stock market, I think this does shake out, and I think it shakes out after the midterm elections. That's what I think. All right. So let me kind of scroll through here again. I'm planning on adding 3M, UTX. Good grief. Everything looks like a value right now. I've got Larry Massa, who's looking to value hunt in the industrials sector. I own both of these great names. I'm fine with it. The 3M's quarter was terrible. The CEO is not doing a very good job of driving this mothership of a company. They better get their act together. Yeah, I don't know if 3M has seen the end of the downturn there, but UTX, absolutely a lot of attractive names, UTX being one of them, Honeywell being one, Lockheed Martin, Boeing, I've mentioned this evening, FedEx, of course, in the industrial sector. So just be kind of careful in getting used to seeing these names at all-time highs, you know, and then when they adjust back, they look really attractive, but they still, you know, haven't adjusted back on those valuations with adjusted corporate earnings being adjusted back. So be kind of careful with just jumping in with both feet right out here. Definitely, if it's a name that you've wanted to own for a long time, long-term, make sure that you're entering into these positions not as a short-term trade, but as long-term investments. And both of those companies obviously are investable companies. Just be kind of careful there. Institutions pulled funds from the market as of August, going into earnings, and are starting to toss money back in as of Wednesday. We should continue to see different sectors affected. I agree. It's a lot of the reason why utilities that have just been silent all year are actually right now kind of getting a nod. There's a rotation from big tech. All right. 1979, I'm not worried. I'm buying, and buying some more. Obstinate one. Have another beer. I don't even have as much confidence as you do. All right. As a matter of fact, here, let me put that down and I'll have a drink with you. All right. Yeah. Have another beer. Seriously. And don't spill it. Don't spill it. All right. We're going to try to get to the end of this live feed, which has been really very enjoyable for me. This has been one of the best that I've enjoyed. I'm very much engaged with you guys and seeing what's going on here. Exactly. If Trump wins again, the market will pick back up. I think that's what people are waiting for. Yeah. I give hints of my political affiliation on the Independent Investor channel. I know it's really not a very, I think unfortunately politics is so divisive nowadays. And I tend to try to shy away from that through YouTube. I could probably come out with some shock videos to gain a ton of subscribers. But again, I'm not going to do that. I'm going to try to build the channel correctly. But I will say this in a politically correct manner. I think once the midterms come and they go, then the market can kind of price in where it is that the direction of the country can go. We're not going to be looking to impeach the president or looking to continue upon an established path that we've had for the last 2 years. And I just think the market does not like uncertainty, like I've said before. All right. So I think the midterms are going to be interesting. I want them over with. Okay. I do. I want them over with, because I've always said, look, as long as it helps my bottom line, and I hate to be greedy in that matter, but I work hard in this country, man. I don't like political uncertainty to be affecting mine and your guys' bottom line. And I think that is a big part of it. All right. I think with that uncertainty, the market doesn't know how to price in the direction of the country and the agendas and the policies that are going to be put forth by either a new administration in either the House or the Senate. I think they have a chance of taking the House, right? Or the Republicans keeping both the House and the Senate. That's just, that's the uncertainty that we have right now. And I can't wait to know. Okay. So it's a pretty good comment. Thank you. I'm stashing my cash to be ready. Smart. It's fear of Pelosi and Schumer in charge. Miles Jenkins. I couldn't agree with you more. That's why I want it over with. I want to know what's going to be going on so I can and I haven't been doing anything really that interesting over the last few weeks. I've just been holding true. And I hope my friend Ben Antonian is doing the same. I've got a question here. Do you just say sell Amazon? I have 8 shares. No. We do not sell Amazon. Do not sell Amazon, man. I know you're sitting on some profit. You do have the option to sell Amazon, certainly, and take those profits. The quarter wasn't a bad quarter. That's the crazy part. And they have so many different sub businesses. The cloud being one of their parts of their business grew triple digits. But I just think from a valuation standpoint, if you were up in the shares, I know what your entry point was, and you're still up in the stock. So, I have 5 shares of Amazon, and I'm down a couple grand. I'm fine with it. I'm going to hold them. I'm not selling crap right now. And you're up a little bit. If you wanted to sell Amazon right here to shore up some cash, you could do that. All right. But, once you do decide to sell Amazon right here and lock in some cash, you could do that. But you've got to be willing to watch Amazon go back to $2,000 a share. Does it have the potential to go down to 800 a share? Yeah, I think it does. And in your particular case, from a portfolio managed perspective, you could absolutely justify taking it off the table right now, because it wasn't a blockbuster quarter. You know what I'm saying? They didn't come out and just kill it. And if they did, you'd be a winner. You wouldn't be asking me this question. But since you are asking me this question and knowing your entry point into the stock, you could absolutely justify selling the stock. And I would consider it in your shoes, not mine. So it's a hold on mine and a potential sell if that's what you wanted to do. Give you a little bit of peace of mind and knowing that you've safeguarded some good shares, some good profit in the name. Otherwise, that's really taken a nosedive right now. I did not expect that at all. So Ben, if you heard me out and you're still in the community here, man, go ahead and give me a thumbs up or something that you acknowledge my advice on Amazon. But you see how the advice can be different for me than it is for you, because you're actually up in the name. I'm not. I didn't enjoy some of that appreciation that it's up 50%. So I've got Ari on the line here. What do you think about cannabis stocks after Canada legalized? I think it's added more volatility actually in the sector. I've been kind of surprised to see a lot of the names sell off. I think we're just at the beginning of a very interesting landscape. I really do. I would be extremely careful if you wanted to take 5% of it and earmark to that particular sector of the stock market. You can do that. That's fine. But just make sure that your entire portfolio is not devoted to that particular sector. Please don't do that. The only reason why I say that is not because I don't believe in the product. I do. Okay. It's just that there's so much volatility surrounding everything being shaken up with the legalization in Canada, the legalization per state in the States. And it's just not something that I really want to jump into directly. Now, if you want to indirectly invest in it, Invest in some of the big healthcare companies. Invest in companies like Philip Morris. Invest in some of the beverage companies like Constellation Brands. That is absolutely a move that I could advocate for right now. GW Pharma is best in breed. If you want to invest in it, go ahead and invest in GW Pharma, because that's a company that actually trades like a normal stock. Some of these other stocks like Tilray and Canopy Growth, for crying out loud, it's nuts, man. I don't know how you guys do it. If you can do it and you can stomach the swings of it, great. But it's not something that I advocate to do exclusively and specifically out of your total overall portfolio holdings, man. Do not invest in that particular sector if you're just looking to make over than average returns. I think you might be drastically mistaken or disappointed if you end up overexposing to that particular sector with everything going on right now. So thank you for the question, Ari. I really appreciate it. Good luck to you. Absolutely. Let me know how you do, if that's the way you go. I just think there's so much more value that's being created in the stock market right here. You could justify a whole host of other names of established companies that we've talked about across the other sectors, the main sectors, and even some of the subsectors out there, to where you could really grab some value in your portfolio. All right, hit the like button. This guy deserves it. Larry Massa, thank you so much. I appreciate it. I'm putting it on the table tonight for you guys. Why is October historically red? I have no idea. Isn't that funny? It's the worst October since 2008, man. It's been terrible. Kronos, thank you. That's the other cannabis stock. Thank you. But I really don't know. It wasn't something that I really foresaw. I just thought we had a lot of momentum moving into October. October 3rd, I believe, the stock market was at an all-time high. So, I just think when the stock market gets crazy, there was no way you could forecast this. There was no way. I pay attention to the stock market, guys, every single day, and there's no way that I could forecast it. And if I can't forecast it, I'm not going to sit here and tell you that it's possible to time the stock market. What I do tell you is the complete opposite. I tell you that it's impossible, and that I mean it. And for a lot of you guys, if you've been paying attention, you can understand why I say that. I mean, just because you get lucky on timing a stock or you sold right before this sell-off doesn't mean that you can time the market every time. It means that you had a little bit of luck. That's all it means. It doesn't mean anything other than that. And I would say good job if you did, but don't think that you can consistently do it over time. That's just impossible. But I wish I had a better answer for you, Lydia. I just don't. I just think it's usually a calm before we enter into seasonality. That's my best crack at that question. Whereas, when we start moving into Black Friday and the excitement around online shopping, you don't think Amazon's going to be part of that discussion? Ouch. I don't know. I think it's going to be exciting. And I feel the same way around every single holiday season. And just to put the stock market aside, man, everybody in this group and everybody should have a lot to feel thankful for. And that's kind of what we're moving into with regard to seasonality. Maybe the stock market does continue to go down. What does it ultimately mean? I don't know. Maybe providing a better buying opportunity for January 1 contributions in 2019. How about that? So yeah, we'll see. We'll see how it shakes out. Doug Whitaker, Apple next week. You bet. I'm fired up. I've got Ron C. Where can you go online to start a self-directed Roth IRA account? Ron C. So there's a lot of different major brokerage houses that offer the best self-directed option. Okay. Me personally, I go with Merrill Edge, Bank of America. Okay. Merrill Edge is really one of the first ones to turn out the self-directed program. I don't know if they're regretting it now. I don't know, because I don't know how much benefit they get out of giving me all kinds of free stuff, but it's a very good broker. Fidelity is another one. E-Trade is another one. TD Ameritrade, Charles Schwab, JP Morgan Chase, Chase Bank. So what I'd recommend to you is to check with your current bank and see if they don't offer a self-directed account. Now, if they look at you like you have two heads sticking out of your shoulder, all right, you need to press a little bit And if the individual that's helping you doesn't know, then insist on speaking with somebody who does. All right? Because those folks are probably trained to upsell you into a managed account. All right? That's where I come in. That's why I provide the clarity to the group and speak the truth about most of these folks have these accounts, but they don't openly advertise for them. So if you do call and they make you feel like an idiot because you're asking for something that they don't know exists, ask to speak to someone else. Cool? Ron C., awesome question. I really appreciate that one, man. That was awesome. What is your strategy to protect your portfolio from the socialists who are gaining strength in this country? They want to rob your wealth and give it to undeserving sloths. Oh boy, I wouldn't have addressed it in that way, but I don't know how many beers you've had so far, but I will entertain the question. Probably a lot deeper answer than you probably want at this point. Here's the thing, man. I'm privileged. I am. There's a lot of people around the world who are not privileged. I probably have a lot more radical views. I'm not one of those folks that think that just because I'm one political affiliation or the other, that I can't have differing opinions on either side of the fence. I don't believe that. I think we need to be more open-minded as people and not get stuck in this rut to where we can't help people. Now, there is some sense of truth to your comment. I think it would be naive for anyone who does not support the current agenda to not acknowledge how well the stock market has been doing. Now, is that due to the current agenda or the previous administration? Hell, I don't know. It doesn't freaking matter. What does matter is that the stock market has run up from 18,000 points and then now is still at around 25,000, right? It's still added a ton of value. What's going to happen if we do end up shaking up what's going on? I don't know. It's a scary proposition, but I've never, ever seen so much divisiveness in this country that I'm seeing right now. And I don't like it. I don't. I think we should try to embrace whatever common threads we have as people. And if somebody is coming from a Democratic point of view or a Republican point of view, it's amazing to me how, if I was observing or coaching a conversation, it seems like both sides don't listen to either side. That's my assessment right now. And that's the most frustrating thing that I observe in our government right now. I mean, I read the Constitution to mean that the people in government work for us, not the other way around. And right now, what I see is certain groups of individuals who work in the Capitol who are not working for us. They are working for their own agenda. And that's not right. It's not right at all. And let me pose a scarier question for you. I would have loved to have seen infrastructure addressed in this country. And it would have been one of those bipartisan issues that could have been brought up. Do you actually think, with the divisiveness right now going on in our government, that our two political parties could work together to get an infrastructure bill put forward? You're crazy. You're crazy. That would never, ever happen. Never. And that's the sad part of the whole thing right now, is that productivity falls by the wayside and agendas become the forefront of conversation. It's just my 2 cents on it. I've been going for about an hour and a half, guys. I'm going to continue to work these questions all the way down the line. Again, I want to thank you guys. But why do they panic? Laugh out loud. Hi, what is your group? I'm interested. Luis Rosales. It's the Facebook group. If somebody can drop a link in there, if Jared Odell is here, if you guys can drop a link into this group for Luis. If you go on to the YouTube channel, I've got the Facebook link is in there for the group. And if you click on any one of my videos, the link is in the description below any one of my YouTube videos. If you can find your way in there, absolutely, man, we'll get you into that group and you can start to enjoy some of the dialogue of some of the administrators in that group, man. We'll take care of you. I'm glad to have you. It's awesome. Look to see you over there. Absolutely. I got Lean Win. Hello all. Thanks, Ryan, for keeping me level-headed during the volatile weeks. Thanks to you, I'm sitting in the sideline at the moment. I might hold off until elections are clear before buying. I think that's a prudent plan. I think that's good. I think you could have done some buying today. I've got a couple guys in the group, like Doug especially. I respect his opinion to all get out, man. And K97 as well thinks that potentially this selling could actually continue. I was actually, you guys might be right from this perspective. I was hoping for more of a washout today. I was actually hoping for the stock market to go down over 1,000 points today. I really was. And I was a little bit pissed to see that there was some bear bull market action right in the middle that kind of it generated some buying interest in the stock market, and it didn't provide that flush out that I was hoping for, because I need a flush out of the stock market. I need to get all these folks that are undisciplined out of the stock market, and that's what it's going to take. So from that perspective, Doug, you might be absolutely right. We might be looking at 1,000, 2,000 point drop in a flush out before we start actually heading back north again. And I hope I'm not right on that. I don't think that I am, but who knows? Who knows? I mean, that could absolutely happen. But I'm glad to help you and staying on the sideline with some cash. Hopefully you are a participant in the stock market. Hopefully you've got enough exposure to the stock market where, you can eventually enjoy some appreciation once the stock market does turn north again. But can you start a self-directed Roth with M1 Finance? Absolutely. Two comments below you have Miss Lydia Santiago, who absolutely does an M1 account, and she runs her retirement account through M1 Finance. And correct me if I'm wrong, Lydia, but I think that's what I understand you use M1 for with your. It's of course a self-directed account, a Roth account through M1 Finance, and the cool thing about them is they offer the free trades, which is a big benefit, which I recommend. Growing your wealth, getting up to that first $50,000 mark in that M1 Finance account. And I'm sorry if this is scary lingo for a lot of you guys, but eventually, I mean, Lydia Santiago, you're on your way. If you're not already at your $10,000, your first $10,000 mark, which is a huge milestone for me, you're going to be on your way to your next $50,000 financial goal. It's that simple. And then you'll be on to six figures and then $250,000. And that's the way you've got to think about breaking down money. Don't invest thinking that you're going to remain stale for the rest of your life, man. Have those goals and acknowledge when you actually do make those financial thresholds in your life. It's awesome. Miles Jenkins, money doesn't have feelings. Yeah, that's a fact. Just make sure that you're allowing your money to work in different fashions. I'm actually starting to enjoy having some of my fixed equities, and that's going to be the next offering I make for you guys. Is should you have some fixed equity in your portfolio, it actually performed fairly well today. I saw a little bit of light at the end of the tunnel there with regard to my fixed equity positions. So it's acting like fixed equity money. My cash money right now is not moving. My invested money is going down the shitter. That's just the way of it. Invested money is going to act like invested money. Don't be surprised when your invested money acts like invested money. All right. Invest in the highest quality companies that you can at the time when you invest in them, and don't second guess yourself. That's the key. Nice to think about M1. You can't just press a button and sell it. Yeah. That was one of the reasons why I moved away from the platform. I like to have a little bit more real-time action. I've got David Mathis. I just opened a fortune cookie that says your financial life will be secure and beneficial. If true, it will be thanks to Ryan and this channel's message. Aw, that's awesome. Thank you. Very cool. I got financial advice from my cookie. I got Ben on the line. Amazon and a question mark. You can sell it if you want. You're up. You've got some pay dirt. Your entry point, if I'm not mistaken, was around 12 to 1400. So you've got $200 of appreciated value there in Amazon. If you want to push it to the side, maybe look to safeguard some money. I know you have Intel as well. Push some money to the side. If you want to take a sell in Amazon, you could absolutely do that, Ben. And I know you're in a position to do that, man. If you can never, ever come to me and ask me, should I sell a stock if I'm up in the stock? Okay. Because it's one of those options that's on the table for you. Okay. So if it's something, I wasn't really that stoked At that valuation, Amazon is an awesome company to invest in, okay? But at that valuation, it's being reevaluated across the board with regard to their earnings forecast, okay? They beat on revenues. They kicked ass. It was an amazing quarter, all right? Their revenues are actually accelerating, okay? It was a very, very weird, and they were punished for it. And that's because of their superior valuation. They're not valued like a value company. They're valued like a hardcore growth company because that's what they are. All right. But if you want to take profits right here, man, I do endorse that move for you. But if you want to discuss further at length, I've been trying to find an opportune time to reach out to you directly, but we're both super busy and we're kind of restricted by the time zone difference. As me being in the storm-stricken Virginia, and you're in the beautiful utopia of California. So I hope you're still on the line, man, listening to me rant about California. Hello, everyone. Hi, financial investor. This is Yoli. Awesome. Financial investor. I'm looking to, so that's for you, Brent. I got Robert Lapointe on the line, who's a very, very astute subscriber to the channel and the group and the community. Love it, man. Okay, thanks, guys. I've got Lee Nguyen, FYI. If anyone, our current or former military, Chase offer free premier checking with a $15,000 minimum requirement. The best benefit is that you invest platform with 100 free trades every year. That's awesome. That's the type of information right there that I love to drop into a community like this, Lee. Thank you so much for that. There's a lot of folks, and I've just come to understand that Chase is one of those really, really good options for the self-directed program as well. So that's really, really important for you guys to know. If you bank with Chase, that gives you that redesignation option really to go in there. And if you have existing accounts with them, especially a Roth IRA, and it's of a managed variety, you can switch that over to a self-directed account. It won't cost you a thing. They won't move a thing. They'll just redesignate it and stop charging you crap fees. It's awesome. Welcome to the Independent Investor Channel. It's an infinite topic. It's amazing. I've got Kong Zhang. Watched your most recent ETF video just now. Noticed you didn't recommend an index fund of the international market. Is it a good idea? Important to have exposure to the international market? It is. It is. What I was trying to do there is meet the stock portfolio of your stock section of your portfolio. All right. Right now, I am 6% international, and my recommended portfolio allocation is 30%. It's just something that I choose not to go with the full 30% of allocation as an aggressive investor. Okay. I'm an aggressive investor, and the portion of my stock portfolio, right? I have 80% in stock and 20% in bonds. The 80% breaks down in a certain percentage in value, a certain percentage in growth, a certain percentage in small cap exposure, and a certain percentage in international. Okay. Now I do own part of my international with my employee sponsored fund in the international index fund that I own there. But I do need to increase my exposure to the international market. But the reason that I did not offer that on that ETF video is that I was trying to give folks the #1 flagship exposure to the S&P 500. And those different offerings, there was 4 ETFs and 1 index fund on there that I feel like you should have all of your money in if you have $0 to $10,000 to invest in the stock market. Okay. And it's really, really important. It's really important to understand that you don't want to take a bunch of your money and put it into the international market. You can. Okay. If you want international exposure, you can buy part of it in the VOO or part of it in, the other offerings that I put forward, the SPY, or the BlackRock offering that I threw on there. You can have some S&P 500 exposure. You can buy some small cap exposure, and you can buy some international exposure. My idea is to get you exposure 100% to the S&P 500 until you get up to that first $10,000 mark, allow that to continue to grow, and then go ahead and branch off into those additional ETFs that cover the small cap offering. And I would go small cap US, Russell 2000, before I would go international. Okay. And then you can go ahead and add some international exposure into that portfolio after you've got that solidified base of S&P 500 exposure in the portfolio. And that's why I didn't offer that international exposure to the stock market. But to answer your question, do I recommend international exposure in the portfolio? The answer is yes, with a caveat. I don't typically agree with the portfolio models that tell me I need to own 30% of my portfolio international. I own 6 right now. I could probably find a happy medium there around 15%. Right, not the full 30, but 15% to get me a little bit closer to recommended allocation. But I'm not interested in owning 30. You see what I mean? So the answer to your question is yes, I do recommend international exposure. I recommend getting that exposure in the same way. VTE, I believe, is Vanguard's international fund ticker symbol. You guys can correct me if I'm wrong. But anyway, I would just grab the exposure through the Vanguard and be done with it. That's the way I would do it. All right. Really, really good question. You can open a self-directed traditional or Roth IRA or brokerage account in the platform. I think you're asking a question of somebody. Financial investor and Lydia, you guys are talking with each other. Settle her down, buddy. I'm down almost $2,000 this week on my Robinhood account. Yeah, Hector, that's just part of the gig, man. Just let it roll. Don't worry about it. You haven't changed anything on your share value. I've still got John in the line here. I've had some of the folks come into the crowd here. We're down to a few people here left in the group. So I'm going to go ahead and start to finish this out. We've been going 1 hour and 46 minutes. So now is your opportunity to hit the thumbs up. I only have 26 thumbs up. So there's 58 of you right now in the group. So I would challenge each and every one of you to take that little mouse or take the top of your beer bottle and hit the thumbs up button on your computer. I can say that because it's not going to damage my computer at all. So hit the thumbs up. Thank you. Yes. Look at that. Now they're going up. See, look how wonderful that is. I never asked you guys for anything, but evidently that helps the channel immensely. But guys, I want to thank you a lot, man. We're going to make a regular thing of this. Get used to the upload schedule. I'm going to be pushing as much content. I'm going to try to grow my channel. All right, to be frank with the group, no more dicking around. All right, I'm going to try to grow the channel, and I'm going to try to grow it hard. All right, you're going to get my best effort. I'm not going to flood the channel and the subscriber group with topics that I don't believe in either. I'm going to really, really try to push out some really valid content that I have on the ledger to push out to you guys. All right, so look for more consistent uploads through the holiday season, guys. So I thank you again for that. What are your thoughts on AT&T in the long term? I think AT&T is fine on the long term. I think it's totally fine. I do have some concerns with AT&T, that of which I don't want to get into now. It has a lot to do with the debt that they took on with the acquisition that they just did, but they need to turn those acquisitions into some money generators for them. And the last quarter that they have was actually somewhat concerning with the amount of subscriber loss that they had on their direct TV platform. But that was concerning to me. But I think AT&T will work it out. I think they'll be fine long term. I own the shares long, but I think you're getting a hell of an entry point right here for a 6% dividend payer in AT&T. So so let me see here. Rabbit by T, long run it will do well. I agree. Believe you have a business account that will offer the free Premier checking. Yep, I appreciate that offering. That was killer. Oh, you can settle wives down when it comes to shoes. This is how I made. I have BSS VXUS on my Roth IRA from Vanguard. You're fine. Yeah, keep those. Those are really, really good accounts. Anything higher than the Premier? Let's see. Just jumped on me again. I've got Chris Kaysen at the very bottom. The inverse of each other seems like one goes up and one goes down. Very easy to spot the profit. I'm 2 weeks starting out in the stock market. Hey, stay strong in there, Chris, man. I got you at the very end of this live chat. It just dropped me all the way to the bottom, and I saw you in there. Jump in the group. I'll probably scan back through this. There it is, VEU. I knew Ernest would come through for me, man, in a big way. He always does. He's there to make sure I stay honest in my ticker symbols, man. So VEU is that international exposure there. So appreciate that. I'm going to try to scan up a little bit, make sure I didn't miss any questions. This thing jumps on me. I don't know what the hell the problem is. I have that look on my must-read list. I really want to get started. I've been looking around, but looking is the easy part. But the interest rate's on the rise. Awesome. I'm at Vanguard. What do you think of Vanguard's $7 trades for the first 25 trades each year? Do you think more brokerages will shift towards cheaper or free trades? I do. I think they're going to go. I think they're going to do away with trades, and I don't think Vanguard is. I think Vanguard tries to use the disincentive, because I don't think that's that good of a bonus. I don't. I think it's silly. And I don't want to assume that you're not a $500,000 and over account holder. I assume that you have less than $500,000 invested with Vanguard. But what you're explaining is part of their Voyager program, that over $500,000 they give discounted trades. Okay, so my understanding is that if you have over $500,000 in assets with them, that's the program that they give. And you may have over $500,000. I don't know. I don't want to imply to know your situation. But it's not until you reach over $1 million that they give you free trades, which I think is BS. That's really why I don't recommend Vanguard for folks that are interested in more of a trading approach in their account. I don't recommend that. I do both, right? So I really want to have that free trading option in my account. And why not? Honestly, I just think they're being a little bit skimpy with their, with their benefits that they provide to their customers. But yeah, I do think a lot of brokers are going to do away with it. And I think Vanguard probably won't, because they don't want to attract a lot of investors that are looking to trade in and out of their accounts. They're a passive organization. They want people to invest for the long term, and they don't want people shifting assets in and out of the account. That's a lot of the reason why I think they have those higher incentives. And it's a lot of the reason why I actually don't really recommend Vanguard. They're an awesome broker. They really are. But I think there's probably 10 others that are better. I really do. Yeah, probably get you a lot better platform usability on the platform, and get you some free trades to boot, man. Why not? You know what I'm saying? Go where the best service is. That's my advice as far as a brokerage. You're not married to your brokerage, right? You take your money where it's going to give you the best bang for your buck. That's my advice. All right. I'm going to go ahead and kick out of the group here, guys. I'm going to wrap it up tonight. Really, hour and 51 minutes, man. I gave it all tonight. I'm starting to lose my voice. I wish you guys well. Certainly, we'll readdress next week. Don't know what's going to happen next week, but certainly want to stay strong. Continuing to move into this this voting, the midterm elections that we've got right around the corner. See how that affects things. Pay attention to the earnings. That's probably going to be a topic of discussion next week with me with regard to what was on with Apple computers and Facebook next week. I'm actually more interested in those earnings than I was this week with Google and Amazon. But certainly, hopefully we can turn things around. If not, it'll be more of the continued get the hell out of October and move right into November. And hopefully we can kind of clean things up as we move into the holiday season. But guys, I want to thank you guys so much for coming into the group and supporting the discussion. I absolutely appreciate every single one of you guys. And I'm going to kind of sign off and enjoy the rest of my Friday evening, guys. Thank you again for everything, and enjoy the rest of the weekend. I will catch you again next Friday. See you guys later.